Market analysis, November 21st, Thursday. Stan Ehrlich. I've got a little bit of a cold, so my voice is extremely rough. I apologize. So we'll make it through this as quickly as I can. I start out with stock market indexes, go to futures and other stuff tomorrow, Friday. My voice providing, I will detail the exact time and day and the track record as a result of my version of the Santa Claus rally, which is buying 1, 2, and 3 trading days before Christmas and looking to liquidate or selling out, or maybe writing it up a little bit more if you can, the first 3 days of January. That's the general. I've got the exact time of day and charts to show you what has happened over the years. Now, and the track record. I have been looking for, and I still am, more of a downside correction in stock market indexes short term. I was looking for the E-mini to come down to 57.24, give or take. But I have to point out that this morning I see something that could change the story completely. And I'll show you the details in just the next few minutes. We have a higher high on the daily data chart for the E-mini. I should say the session chart because it doesn't include just daylight. It's overnight, of course. If we stay here or even gain more strength by the close today, then I'm losing most of my bearish technical indications and in the process of starting the process of making new highs for the whole damn trend. And I'll show you why. If we do close poorly, just a little tiny bit higher, or anything less than that, unchanged lower on the day, especially if it got below yesterday's low, that would be a bearish engulfing, and I would be right back to, and still am at the moment, expecting a break. So at any minute, everything could fail and turn down big time. Hasn't happened. We keep on chewing into new high ground on the last few days. Bottoms are starting to come up. Highs are up for the fourth day now in progress. And look at the 1 minute chart, 5 minute chart on the E-mini. Okay, so when Friday of last week had a low, we had a slightly higher low on Monday, and then Tuesday, it turns out the new low for the move down and a bearish engulfing and an ER sell signal didn't pan out, didn't work. That tells me something about the way the market's acting. When I see my signals, and they often, usually work, and they don't work, then I've got something extra strong or extra weak, one way or the other, possibly in the offing. So on the 19th, 2 days ago, Tuesday, we have the lowest low. Now we've come up and we have a slightly higher high and another, although it's coupled together this morning, low, and we are starting to make new highs for the last 3.5 days. If you drew a line across the highest highs during those 3.5 days on this 5 minute chart, excuse me, you'll see that I seem to have a neckline on a double shoulder, head and shoulder bottom. It's very, very small. Remember, this is a 5 minute chart. It can succeed or fail in a very short period of time, hours or maybe a couple of days. So if we start to break above the yellow neckline and close above it, then my upside objective is a new historic high ground slightly. Got to go with what you see. So no signals. A previous bear signal failed, but I did make a little bit of money or lose a little bit of money. It's very close. One way or the other, it's not that important. And a complete failure at this point, at these prices right now, would kill this formation and cause it to probably go down to what I was expecting. Next chart. Spider, just basically the same thing, but we did close the gap above the market. The gap down occurred on 11:15, and there's still another gap below the market that I think has a chance of still being closed, but it hinges on pretty much this rally stopping where it is, or maybe a tiny bit higher, and turning down substantially and quickly. We'll see. So far, this is acting very strong, stronger than I expected. And if it stays that way, I would be expecting new historic highs in a blink, a few days or less. We're just getting the detail on the SPY 5-minute chart just made in the last 10 minutes or less. The high for the day, the high for the last 3 days and a half. The reversal down is just not panning out at this point. But I'm very, very cautious about it because this is kind of a make it or break it. Next chart, QQQ. Almost closed the gap. It has a little bit more to go above today's high to do the job. So I have to allow for a little bit more strength. And then let's see. So I'm losing my bearish expectations because prices are not cooperating. Now, sideways would have been okay because it doesn't kill the bearish, but this rally starts to do that. Next chart. The high here on the QQQ was made on the opening this morning. And again, it's quite sizable break. Didn't make new lows for the last few days. And here we are coming right back up close to those highs. Now, the NASDAQ has higher lows from Tuesday and higher highs. We don't have a gap to close, but we're in the ballpark if we had a gap, but there is none because it's a 23 out of 24-hour trading day, only closed for an hour. So again, very critical territory, almost making new highs. Here's the neckline on the 4-day, 1, 2, 3, 4, 5-day, possible, very small, head and shoulder bottom, actually double shoulder 1, 2. The bottom is right there, and it is the lowest low. And then 1, 2. So if this works out, you've got slight new historic highs, which will probably lead to more strength. Probably. Next, very strong YM, daily data, going up the quickest, the best, the fastest, and pretty much high and last right now. Yep, you got it. Its pattern is basically the same: shoulder, shoulder, head, shoulder, shoulder, and we broke out already this morning, came back down to approximately the neckline, a little bit lower than I would have expected, and made new highs. That's bullish. This pattern is working. This pattern is almost to its minimum objective in one day. 44, 194 would be about right. Not much farther. So nothing's topping out. Nothing's rolling over. I've got reasons to believe it could work a little bit higher or more. I got to see everything start to break down in order to keep my bearish expectations. They are dwindling. Now, Russell, bottom of support area, a couple of days ago, Tuesday, bounced off of it, and now is coming up very strong, very quick. That looks very much like the others, except the 5-minute chart doesn't quite have as good a pattern, but it does have it. There's your shoulder, about the same level, another, the bottom, a shoulder, and then early this morning around 1:45 California time AM, the last shoulder. Breakout, false, pullback, a legitimate breakout. Kept on going. We're high and last right now and already about halfway up to its minimum upside objective. Next, we got bonds. We're down 10. We haven't had any lower lows yet. And I don't think, my opinion, we're not going to see them because I'd love to see this little double bottom generate a rally and be the last shoulder low of a 2-year bottom formation, which I have been talking about for weeks and weeks. Excuse me. The upside objective would be 150. Very bullish long term. Many months from now, maybe over a year. 10-year notes, same formation, same situation, except we're not down quite as much. 6 ticks, 7 ticks is not anything particularly important usually. So it's got to start going up. Next, we see crude oil. We do at the moment have a bearish engulfing with the current blue current tick marker below yesterday's close. We have an outside down day. That means the market should start to head south. And that's going to hit the support area again. We'll see if it holds. On the other hand, if we start to hold here and start to go up, closing above 72.75 would probably be very bullish. Then you would be building a very large, from August, September, October, November, 4-month sideways mostly, trading range bottom. So the key here is staying above 66.50. Below that, I get bearish real quick. And above 72.70, I'm going to think about much higher levels. Next, heating oil. Engulfing at the moment, up a little. Let's see if this can push prices higher. We do have somewhat higher lows in the last couple of months. That's an indication of a trend, but we also have a sell signal on top that worked great, a rally that did not make a new high, and we're kind of between a rock and a hard spot. The idea here is basically the same as crude. Next, natural gas. It has almost reached, in 2 days, its minimum upside objective of 3.5. It gapped up today. So I'm thinking it's going to come down, close the gap. That's getting back down to the high of yesterday or a little lower and turn back up again. So far, this medium to small daily data, well, about a 1-month head and shoulder bottom has worked perfectly, but just super fast. Next, gold. Got oversold, touched support a few days ago, new high for the move up. But watch out now. Come on. We gapped up. Gaps are almost always closed. So 26.44 is a minor downside in the next few days, dip objective, and then up to higher levels. And gold and silver, platinum, gold and silver mostly, have been in a long-term bull trend. So I'm not ruling out at all possible new historic highs. Silver, a little bit of a dip today at the moment. Support level oversold conditions did turn the market for a few days. Very nice. No signal per se. And unless some other type of a bearish formation is building, I'm going to say the same thing about silver. Support, oversold condition, turned it up. This is a minor dip. Somewhere in here, it may be a good buy. Don't know quite yet. Let's see if I can grab onto a buy signal. I still have another day or two of time. Platinum, a little bit of a dip. We got oversold a few days ago in a support area. Some of my favorite reasons to turn up, it did. Of course, we had that sell signal on the top. That worked great for a few weeks. And on the top back here, which worked great for over a month in general. All right. Turning friendly on silver, platinum, and gold. Looking for tests of important resistance levels and maybe continuing the longer-term trend would be making new highs. Copper. Support area again. Oversold at the same time. Good reason to look for a rally. We got one. Not real substantial yet, and I am still short from the high day, which is on September 30th. I'm showing you the ER3 trade, which got short 2 days later because of the bearish engulfing ER sell signal 2 days earlier. Then we got another sell signal. So I rode this thing up from the bottom to the high, reversed, got short a day or two later, all the way down to where it is now. And I'm hoping I'm going to get another buy signal, but it looks unlikely. Nevertheless, I still think we're in the process of bottoming out and turning up. Soybeans, grains. Well, I'll be damned. I didn't want this sell signal on November 14th. Didn't like it. Didn't like where it was created. Thought it was going to fail. We got short in ER3 the next day, and I'm showing you that trade right now. It is still short. We have a new low for the move and a test of the lowest lows since August. That support, it was broken slightly, a little chip out of it, but we're trading above it at the moment. We're not oversold. Will it turn around because of support? Interesting. I think there's a chance, but it's not happening yet. The only bullish thing I can say at the moment is if it does close very strong, and that does not look likely. So I think the sell signal, which has already worked, past tense, and I haven't taken the time to lower my stop, but I obviously should. Using the default, it's a little slow. So I can change that easily enough and lock in a profit and just take it from there. Signal, great. Didn't think it was going to happen, but it started to work yesterday, basically. And today, wow, another good down day. Bearish on beans, can't help it. Support levels are being challenged. Sell signals are working, looking for lower lows, and maybe a lot. Next, oil hit support level, did not hold, dropped below support level, and this is a new low for about a month. Now, it is also completely failing to hold the neckline yesterday on the head and shoulder bottom formation of soybean oil. So that is a dead issue. This formation simply did not work. You abandon what ideas you had before about the formation, and you go back to looking for other situations and other formations, etc., over time. Normal process. Not all chart formations, signals, etc., work. Period. You have to know what to do when they don't perform as you thought they were going to. Money management. All right. So it's turning bearish. We got a sell signal at the top of the damn rally. So what am I complaining about? I thought we would hold and start to turn up. Sell signal more powerful than I expected. Bearish. Looking for test of support levels. Looking for test of the lowest lows. Maybe major new lows. Next, soybean meal. Almost making new lows again. That already did it a week ago. And soybean meal is coming close to new lows almost for years. I'm expecting the support area not to hold. It might bounce a little bit in the next week or two at the most, not much, and then turn into new lows. But I doubt that. I think it's going to turn into new lows real soon. Next, corn. Resistance stopping the rally. It has all the chances at this point to break out of this bottom formation, which is not broken out of yet. So it's not really done, finished. The upside objective is only legitimate after you cross the neckline on a closing basis. Hasn't happened. No breakout. We're stumbling a little here, right around 441 or so, and now starting to slip. Yeah, there's some support below the market, but you're nowhere near oversold. Given all the other grains and what they're doing, I think soybean corn is going to get dragged down with beans, oil, meal. We'll see. The formation I'm not erasing because you really haven't damaged the possibility yet. But I would say if you get below 427 on a closing basis, I'll remove the shoulder markers, and the head formation marker and the shoulder marker, the first shoulder, and abandon the neckline also. But right now, you shouldn't do that, just in case. That's one of my favorite orders, JIC, not MOC, JIC, just in case. Next, that's not a legitimate order, people. Wheat, oversold, bounced, doing a little bit better job today, not much. Minor new high, the low is higher. Okay, but it's bumping up against a little area of resistance here. Not much, but how can I just justify a bull move in wheat if corn and beans, oil, meal are looking rather dismal? So I'm very skeptical about any bullish appearances, activity in the grain or wheat at the moment. So I'm going to reserve a little commentary here. By the way, I'll be giving my YouTube tomorrow, Friday, voice allowing, and on Monday. But Tuesday, Wednesday, Thursday, Friday next week, Halloween, Thanksgiving week, I will be gone. So there will be no YouTube 4 of the last 5 days next week, and resume, of course, on Monday after Thanksgiving. Now, wheat, very skeptical about any more rallies. Cattle, dropping off sharply, making a new low. Oh, I'm sorry, not looking at that. We had a buy signal a couple days ago. I knew that looked wrong. And it has been working very, very well. Yesterday in particular, new highs, and Tuesday, big rally. So for all practical purposes, it's simply done what I wanted. We have a long position still for an ER3 overnight, and it's holding. We have a nice profit. We're not out of it. What can I say? Buy signal at the bottom of the break basically has worked great. So I'm expecting cattle to make higher highs here. It is in support, not overbought. I like what I see. Still looking for more strength in cattle. Hogs, minor new high. Back up above a previous line I had in here. Did this shift for some reason? Yeah, it shifted because it changed contract months. That's where it should be, right there. Sorry. Good. Came up to that resistance line, overbought, stopped, pulled back to support, didn't need to be oversold, turned around anyway, and that was a low 2 days ago. And we have a new high for a few days. Looks like the trend up in hogs is going to continue. Why don't they have turkey futures? I don't know. They used to have egg. They used to have ice broilers, chicken, and pork bellies. But Milo is a grain. They used to have Milo futures on the Merck also. It wasn't on the board with the other grains. It was on the Merck. Remember, I started in 71 as a runner on the Merck. Okay. SQ is a stock. I told you that if the stocks indexes continue to be bearish, this would have a hard time of maintaining its current strength and what appears to be a legitimate upside breakout as of the last couple of days yesterday. But the stock indexes are doing a fairly decent job of holding and made minor new highs. So it's actually helping this SQ stock to rally, and it is. The neckline and support area have held. The new high ground is looking good. We had a small head and shoulder bottom. It lasted about 2 to 3 months. It's great. Long time ago, it already got to its minimum upside objective real quickly. From the lowest low, you measure up to where the neckline is touched, and you take that vertical line there, good enough. And you start at the breakout level right here, and that was the objective minimum. So 82.08, 10, 12, whatever was reached a week ago, and we're a lot higher. Now, this is why I'm showing you this. Look at this big, huge, beautiful long-term bottom formation in this stock at major long-term historical support. And that, of course, was October last year. Since then, rally highs have been challenged for the last couple of years. Lows have not broken any previous lows of significant. In fact, they came back to support. And I can make a case for a double shoulder, head and shoulder bottom, or a single shoulder, whatever. But it's a big formation. It is October of 22 to date, very much like interest rate futures. So this is a long-term bullish breakout that says we're supposed to go up to 134. But look what history has shown us. This has already been up to 260, 280, well above 200, where the resistance really starts. So I'm not looking for just 133. That's minimum. This could be a lot more bullish. It's more than 100% rally. 93 last, that would be 180. I can see the potential of 200. This is great. Okay, E-mini again. It's still up there. Don't see any reason. It touched the neckline. This is critical. This is the spot for either a breakout very soon, I'm talking an hour or less, or it's going to stop and it's going to be a failure. Whoops, sorry, wrong chart. There we go. So right here, if you like the pattern, you're wanting to buy badly if it gets above the line again, makes a minor new high, with a relatively tight stop because it's not supposed to go back below the line. If you're bearish, this is where it could stop rallying right at the neckline. It's a make it or break it. And if it does go down, you're going to put your stop a little bit above the high within the last, 5-10 minutes, 20? This is a 5-minute chart. You guys have a great day, profitable trading to you, and I hope my voice is better for tomorrow for you. Have profitable trading to you.